We've seen a lot of battery metals companies. They're particularly interesting at the moment because there is so much demand for the product. Lots of people looking for offtake for these things. Companies fighting over each other, particularly in the lithium space. We're now seeing that extending into other battery materials. Definite strong demand for nickel. We think that will move into graphite for carbon anodes soon. Also, high purity silica as well, or high purity alumina, to be more precise, is another area. So we're seeing more and more of these areas that we used not really to focus on, particularly. They were more industrial metals, are suddenly becoming a bit mainstream, definitely more popular, definitely funding coming from new sources. So we're seeing government funding being directed through private equity funds, particularly with US money. European money coming through in not NGOs, but developmental funds. We're seeing lots of family office money coming through because, of course, they can sense that there's money to be made here. It's extraordinary competition. So if you take Kodal Minerals, Hainan Mining out of China just pushed out another Chinese company offering $100 million to build the Beguni project in Mali. And that's an extraordinary deal. That really is impressive. They've also put in $16 million at a 100% premium to the share price on the day they announced the deal. If we go further afield, go into Ghana, Atlantic Lithium on the coast there, huge amount of support from the Ghanaian Ministry of Mines. We've just been with the minister earlier today. They're also looking to put $20, $30 million into the company from their sovereign wealth fund. They're developing that fund to make more investments in mining in Ghana, and the government is streamlining the whole process to bring things through on a fast track. So there's a lot happening out here, and the Indaba is where a lot of this stuff gets done.
Atlantic Lithium is taking the Awoya lithium project in Ghana to production. We're currently at the stage of completing studies on the project, with a definitive feasibility study to be completed around mid-year, having previously completed a pre-feasibility study last year. The project economics are exceptional. We are low capex and low opex. With the completion of the definitive feasibility study and an issue of a mining license in the course of this year, we plan to break ground on the project by the year end and be in production by the end of the year following.
So Rainbow is a rare earth business with a flagship project in Phalaborwa in South Africa. Rare earths are very key for all electric vehicles and wind turbines for green energy right now, and it's dominated by China. We dominate 80% of production and 90% of the downstream. So the whole world's looking to diversify away from China in terms of a strategic supply chain, and Rainbow is part of that solution. Our project in Phalaborwa, we released the feasibility last quarter, which shows that we've got very strong numbers. We've got an NPV at spot pricing of over $620 million. We've got an IRR, post-tax IRR of over 40%. Very importantly, a life of project EBITDA margin of over 75%. And the Rainbow's project in Phalaborwa, with taking rare earths out of gypsum residue waste as a result of phosphoric acid production by Sasol, will produce $200 million of EBITDA per annum, which is very, very strong, with only a $300 million capital spend, which is a very low capital intensity for any rare earth project in the world right now. And that's a result that we don't have to do the mining. We're just taking it straight out of a cracked chemical source on the gypsum stacks in Phalaborwa.
We're a AIM-listed, lithium-focused company exploring and moving to development in Mali, West Africa. Our project, the Beguni project, we've recently been able to announce we're fully funded for development now, with a new partner, Hainan Mining, who are looking to support us through the development and future production of the project. $100 million equity investment into the project, followed by a $17.75 million equity investment into the PLC company at a great premium of 0.5p. With this great financial support, we'll rapidly move into development, expected to be a 12-month process from commencement to production. We're looking to produce 125,000 tonne per annum of spodumene concentrate, supplying a market that has a large supply-demand gap at the moment and a great opportunity for us. Over the next year, you'll see a lot of news from us regarding drilling on site, where we're upping our exploration on already identified prospects, and followed by, of course, the development news, which we'll regularly supply to our shareholders.
So derived mining is the evolution of AfriTin. So we started off as a tin company, and what we've done now is we're expanding the resource. We're adding lithium in, which is really exciting for us this year. And what we wanted to become is the technology metals champion of Africa. So we've just completed an exploration program and basically infill drilled for the lithium and tantalum. And we're very pleased to announce that the resource is in fact 30% bigger. So we've got a lot more confidence in terms of what the lithium can deliver. And now what that allows us to do is put an economic value to the lithium, which really enhances the value proposition of derived mining.